we are back. Welcome to Markets Today. I'm your host, Mbitha Mwema. Now, today's the 17th of October, rather. It would just be another ordinary day as we are heading to the close of the week, but it's not. The President, His Excellency President Uhuru Kenyatta, has rejected the finance bill, reverted it back to Parliament, citing the element of a total repeal of the rate cap. What has happened on the NSE? Banking stocks are already up 5%. And CBA, which is a merger of NIC and CBA, is already up 7% on the day, followed by Equity Bank, which is up 5%, as well as KCB. What is happening with regards to turnover? We have seen 40 million shares exchanged with regards to the equity counter. Foreign sellers and a mix of local and domestic buyers on this counter. To give you the perspective, this is a counter that typically trades 2 to 3 million on a good day, 5 million to 6 million if you stretch it. Now, looking at 40 million, that's slightly over 10 times its average trading value. There's certainly a lot of excitement, something that we have been waiting for to hear the rate cap repeal, certainly not expected to go this way. What does it mean? Do we see anything beyond 5% with regards to the capital appreciation or price appreciation for the stocks? Could it be up to 50% in the next year or not? What does it mean for earnings? What does it mean for dividends? What does it mean for capital allocation by the banks? In studio, we do have Mr. Caleb Mugendi, who's the Assistant of Investments at CYTONN, joining us this afternoon. Welcome to the show, Caleb.
Thank you, Mbitha.
Certainly a very exciting day.
Yes, it is.
What are your thoughts? I don't even think I need to ask what are your thoughts on. What are your thoughts?
Well, it's a positive surprise, for sure. We've long had the view that the interest rate cap is actually detrimental to the economy and should be repealed or amended in some way. So having the executive actually revert back the bill to Parliament and tell the legislators to not even to amend it, but to do away with it is a welcome surprise, welcome good news from our end.
Okay, so certainly a positive surprise.
Yes.
But what are the next steps? Because Parliament does go for recess today, then they come back on the 29th. What should we be looking out for? Are there any particular key dates? What's the way forward from this point?
Well, the Parliament does have a couple of options. They can take the amendments that the President actually put in.
Okay.
That is to actually do away with the act, the Banking Act, or they can pass it through a 2/3 majority. Well, this will require most of the legislators to be on the same page.
Okay.
But initially, that's actually what we saw, as most of the MPs were actually opposed to the repeal or amending of the cap. So from our view, we think that the executive will have to spend a bit of political capital to convince lawmakers that this needs to happen,
okay,
and for the economy, for the country. Yeah.
All right. We were discussing during the break because we were going through the wording of this particular notice that was sent back to Parliament via the Speaker.
Yes.
His Excellency does not mince his words.
Yes, that's true.
There's okay, yes, an X has happened, but the conclusion: remove the rate cap, pass the finance bill.
Yes.
What is your read with regards to this particular notice?
Well, the notice actually laid out a number of points towards that conclusion. One, that surveys have been conducted, that the cap has not actually achieved its intended purpose. The slowing private sector credit growth, a lot of the economy is slowing down. Micro, small and medium enterprises are actually the hardest hit because they're not able to access credit. And also the fact that previously we had exorbitant interest rates was also mentioned. By bringing the banking sector charter that should actually regulate practices in the industry. So we do not expect, even the President doesn't expect a reversion to what we had previously, and I think at this point in time, from the studies that have been carried out, from the pressure also from the Treasury, the central bank, of the detrimental effects of the interest rate cap have actually weighed on his mind, and he has brought that out
very clearly.
Very clearly.
Okay, yes. So he has facts and figures to actually support the fact that this was not a decision that was beneficial to the economy, and now we just need to stop it at this point in time. reverse this decision and move forward. So
Yes.
certainly that's positive.
Yes.
Over and above that, we have seen a lot of excitement on the Nairobi Securities Exchange. 40 million shares have been traded in Equity Bank.
Yeah.
I mean, it's already up 5%.
Yes.
Tell us, what are your views on this?
I think that is, as you said, there's a lot of excitement, especially this week. There's a lull this week. I think it because of the changing to the new system by brokers, the new system, the automated system that allows short selling and the like. So before brokers and clients had a chance to figure out that system, I think there was depressed volumes this week. But now with the news, I think banking sector's stocks, the banking sector stocks, especially we have the equity bank that was mainly exposed towards government security, so they can actually realign their balance sheet quite quickly and take advantage of lending should the rate cap be repealed as suggested by the president.
Okay.
So we do expect there have been a lot of the counters have been trading at a discount to book value, and even if you compare it to historical values. So there is room for earnings growth going forward, especially if the rate cap is repealed. Interest income should grow. That should improve earnings growth in the sector.
Yes.
And banks should actually trade higher.
Okay, fantastic. All right, now let's look at the fundamentals. I mean, you are an analyst. You have been covering the banking sector for a while now.
Yep.
You're also the assistant head of investments, which means also capital allocation, whether into fixed income, equities, and what equities is something that plays at the fore of your mind each and every single day.
Yeah.
So today, when you're looking at banks, are you going to put additional money into the banking stocks?
Yes, I actually will. We've been bullish on a lot of counters in the banking sector for a while now, and we expect this to continue even without the interest rate cap. Banks had actually found a way to organize their business models. All the talk was on growing the non-funded income and cost rationalization. But now, if the Banking Amendment Act is repealed and we go back to a free market in terms of interest rate controls, then even growing net interest income and interest income shall be another focus.
All right. So for you, you're going to put more money in.
Yes.
How far up can it go? So today we are talking about 5%. Mm-hmm. So does this become 10% tomorrow? Does it become 30? I mean, I'm not trying to put you in a box where you have to give us a very definite answer, but I'm trying to look at, you have been creating scenarios and looking at your banks and doing your analysis and saying already there's a buy opportunity with the rate cap. Now that the rate cap is not there, by what margin does your buy opportunity extend by?
Well, if you look at just the whole market in general, if you were just to revert to mean, that's close to a 20%, because we're trading at a P of like 12, less than, 11 points.
So that's where we are trading. Today the sector is at about 11 to 12 times, and that's price to earnings ratio.
Price to earnings, yeah. And historical average is around 13 to 13 and a half. So just that we have close to a 20-25% upside.
All right.
And then if you come into the banking sector specifically, again we're trading at lower valuations. If you compare in terms of price to book, price tangible book, we're like at 1.2 times versus a historical average of close to 1.5, 1.4, 1.5. Okay. So that's another 20-30% upside just by reversion to the mean.
Just by the reversion to the mean.
Yes. And,
wow, I like that.
Yeah.
So if you've already missed a 5%, it means you have anything between 15 to 25%, but you must make that decision first.
Yes.
Okay.
And now banks have actually been able to reorganize their business models.
Yes.
And that should not the progress that was made during this era of capped interest rates should not come out. I think that they position themselves even better than before. So
the environment that they're operating in is much stronger than it has ever been actually.
I would say in terms of how they've aligned their business model is much better. The environment, the macroeconomic and operating environment has, we're saying, is softened a bit, but it's still quite robust.
Fair enough. Yeah. All right, I think let's take a pause there. NSE has closed. Look out for the closing bell. We'll give you the numbers when we come back shortly.